What is up, everybody? What is up? We are here with another Christmas special, a Christmas present from me to you guys. But yeah, I want to try and do a Christmas special every year. But nonetheless, I want to start off by saying, Merry Christmas. Hope you guys had a good 2020 year, despite all of the things that have happened this year. I hope you guys made the best of it. And without further ado, let's get in it. So, with this Christmas special, today I want to talk about major and minor swing points and finding intraday setups using breaks of structure to your advantage. So say let's go over here to Euro USD and we'll talk about major and minor setup or swing setups, right? Maybe we could use the monthly time frame here. So when I look for, the difference between a major swing and a minor swing setup is always a break in structure, right? Even on even on intraday time frames, I always look for a break of structure to, give me the best guide of which direction the market is going. So for a perfect example of this, right? So you see how we have this low here to this high, right? So we could say that that is a major swing point, okay? Because we broke structure right here. But if you look at the move to the right, where price had, drastically dropped and traded back up, right? We didn't break this low down here. This low down here didn't get broken from this swing point right here. So I would say, you know, this would still technically be bullish. So as price comes back up, you see how we started to reverse in this area right here, and price came back down and we finally broke that structure right here. We broke this structure finally right here, right? So when we look at this, right, this from this swing low to this swing high tells us bullish, bullish direction, right? Price comes back down, we feel this inefficiency in this area right here and all that good stuff. Okay? So when this structure down in this area gets broken, now we can start to shift our bias. We can start to change our bias in direction. So look at what happens here. This last push up before the move started going down that broke this structure, we have this engulfed candle here. So if I was to mark this off for in the future, right, I can use this as a potential um, area for interest, right? Now look here again. From here, from here, we'll make this one red. Oh, we'll make this one red. You guys can't really see the color that well. Oh, it's because of this. Yeah, we'll make that one red. And this swing low red as well. So you see how from here to here, we would have hit our target profit region, but we didn't break this structure, right? So from here to here wouldn't be considered to me a major swing because there was no break in structure. Same as this area right here. From this swing low to this swing high, there wasn't really a break of that major swing high here. Now look at what happens. Price aggressively trades below this swing low, giving us that break in structure that we look for, right? We broke structure here. Now look at the difference between how this structure got broken and this structure got broken, right? This last impulse here is what broke the structure before we started reversing. This impulse started breaking structure, with aggressive push downs from up here, right? So we continuously just aggressively traded down. And this could have been part of a crash that might have occurred. You can see it went from May 1st, 2014, all the way to January of 2015. So quite a vast majority of time. But look at what happens in this area, right? When we break this structure here, I want to use that as my advantage to maybe possibly give me a bias on direction, right? So if I was to map this area out for the future, right, and you see price come back up into that area right in here, giving us another swing point. Now you wouldn't just want to enter off of this area from the monthly time frame just because it gets here. You would want to be looking for the same type of stuff in this area on lower time frames, right? Giving you a really a more precise entry and such like that. But you can see the difference from these swing points right here, right? I mean, even just over here at the beginning of where this price chart starts, we have this push up right here, and then we make a high, and then we make a higher low, and then a higher high, and then a higher low, and then a higher high, right? So, oops. So I would say from this swing high to this swing low is a minor swing point. From this swing low to this swing high that broke structure to the left is a major swing point. From this swing high to this swing low is a minor swing point. And from this swing high to this, excuse me, from this swing low to this swing high is a major swing point. And once again, this swing low, excuse me, I'm sorry, I'm messing it up. This swing high to this swing low is a minor swing point, and as you can obviously see, this swing low all the way up to this swing high is a major swing point. So it's not too complex to tell, you know, where your bigger moves might play out. Using breaks of structure to your advantage is, it's very key, especially to your analysis, right? Because that really, really can help you to decide, which possible direction the market is really intending to go, right? So you know, even from, I would say from here to here, maybe on a lower time frame, maybe on a lower time frame from this impulse up back into this area down here, like this impulse up back into this area here, you might have seen a break of structure on the lower time frames, right? And then it would have given you a very good entry, you know, to buy back up all the way up into this area of inefficiency that we see right here, right? Then ultimately using this area to come back down, break this structure, retrace back up into that point of interest where that inefficiency got filled. This last up candle got engulfed and structure got broken all at the same time. So that, I hope you understand, um, you know, using breaks of structures with your major and minor swing points. And just for another quick example again, even we have this swing low to this swing high, correct? So look at where structure got broken, right? We broke through buy side liquidity, okay? Buy side liquidity. And we retraced back down into that area, that last down candle before price took off and breaking that structure. Look in this area here. You see that? Would have had a very, very, very precise entry if we would have scaled down to, you know, say the 4 hour, the 1 hour time frame. We would have had a very, very clean entry right there. So hope you guys understood that break of structure, and I hope you understand, you know, major and minor swing points a little bit better as well. So here we are on the 5 minute time frame, and we're just going to back test the past month of December, right? We're going to, you know, study intraday setups, you know, 20 to 30 to 40 pip moves that you can find literally every single week, maybe even multiple times on the same pair every single week, right? So we can get started in this area right here. Let me hide this. Right, so in this area, we're looking to not only one, find a bias for the week, but also find um, where we can get in, right? So right here we have, you know, December 1st, November 30th, market open on a Sunday. So we can map off the market open right here. Let's call this market open, right? So one thing I always like to do sometimes is mark off the market open. So if at the beginning of the week, if we trade, you know, higher than the market open, creating, you know, maybe a high of the week, and I always like to wait until Tuesday at least, right? Sunday and Monday, I don't like to be in the market. I don't even like to watch what happens those days theoretically. So, but just as an example, um, say say we have market open right here, and we start getting rallies above at the beginning of the week. Most likely, what's going to happen is the market is going to be bearish for the rest of the week. And then say we get a market open and price quickly trades down at the start of the week. So what most likely is going to happen, we're going to be bullish for the rest of the week, right? So hopefully you understood that. And no, it's not going to happen every single time, every single week, every single day. All right? So don't get on me for that. But in this instance right here, so what we see is we see market open and then eventually excuse me, and then eventually the market has this huge shift right to the downside, creating that low on Tuesday. So if we look in this area, right, we can see after around London session, right, we start trading back up above the market open, above this high, right? So what I like to do is I like to mark out where the swing low to swing high is that broke structure, okay? So I would say from here, from this swing low, we see structure to the left, and then this swing high right here. Okay, get that on there correct, right? So as price trades back down into this area, you see the top of this structure right here, it is around that 72.82 fib level, okay? We can even make it tighter. We could even have used this rally-based rally in this area, but we're just trying to make it as educational and not as perfect as possible, because your trading is not, it's never going to be it's never going to be perfect, right? Your trading is never going to be perfect. You're not always going to get exactly what you want to see in the market. It's just not going to happen, okay? So don't think that just because, something didn't happen once and then it happened again and then it didn't happen and then it's not your fault, right? It's just sometimes that's how the market is. So with that being said, we see this entry down here, right? Now, look at the risk to reward. So you always want, at you always want a place where you can take partials. And for me, that is always on this negative 10 fib. And why is that, you may ask? Because for me, this negative 10 fib is always going to be just a little bit above or below, depending on if I'm looking for sells. But in this scenario, I've been looking for buys. It's always going to be a little bit above a high, right? Just a little bit above it. Okay. So in this scenario right here, let's say we would have entered down in this 72, 82 fib area around this structure. My stop loss would be 6 pips for my take profit at 27 pips. So let's just calculate and see this really quick. So let's just see. I entered down here. We would have a stop loss of 6 pips for 27 pips. So just right off the bat, we would have had a 4-to-1 trade setup. A 4-to-1, right? I don't know about you, but you know, anything higher than a 2-to-1 is good for me. So a 3-to-1, 4-to-1, 5-to-1, you have potential to make very good profit in these markets, right? But that's not even it. because look at the move that, just kept going. So I would use this right here for a TP1, and maybe you could twin trade and have two positions. So your first position that you put targeted this high on TP1. And then after you see that, your second position, you would want to put your stop loss at break even and let this ride out. So your second position could have potentially made a profit of a maximum around 90 pips. All right. So looking at this next move here that I see, and as a matter of fact, in this same area. So look, we are just now approaching New York session around 6 o'clock a.m., 7 o'clock, 8 o'clock, right? So we see this break in structure here. Boom, broke this structure, retraced back down, boom, broke structure again. So look, from this swing low to the structure, or to the high that broke structure, right? Boom, back down in that area. So you see this last down candle right here that got engulfed? I would want to use that as a projectile area where I could possibly see a reaction. And just sure enough, price had just wicked beautifully down into that area, giving us a another perfect entry. So, this right here went a max of another 90 pips, right? So very, very good trade setups, very good risk to reward. Now, continuing on in this week right here, look, look right here. So once again, right here on Wednesday. So here's Asian session looking very ugly. Market trades above Asian on coming into London session, and then we trade lower. So look at what happens right here. We get this break of structure going into New York session. Okay, we get this break of structure going into New York session. Now look again. We have another break of structure around 8:30 in the morning. We have another break of structure sending us higher. So look, if this was my point of interest right here, I'll take from this low, right? You see structure got broken right here to the left up into that swing high, okay? Now, where is that structure that got broken? Right, right here, correct? So if I was to use that area as a point of interest that I can use to maybe capitalize on a possible entry, this is where it would be. So from this swing low to this swing high, because this is where it started to retrace, right? And this is where that structure got broken. So around this 62, 72 break of structure area is where I would be looking to capitalize on a trade. Now look, you could have right here entry. You could have stop loss down here at 15 pips. Okay, and then remember what we said. TP1 right here at negative 10 fib level. Okay, so remember entry here, stop loss at 15 pips. But look, profit at 34. So on a Wednesday, we got a 1 to 2 setup. Not ideal, but you made money and you traded in the right direction. And once again, look, this stuff is no joke. This stuff is really no joke. So look, even though you had a 15 pip stop loss, maybe you twin traded, right? So as price came up to your first TP at 35 pips, you had another position. And as your first take profit got hit, you moved your stop loss into profit or at break even. I always put mine in a little bit of profit. So if it does come back and take me out, at least I had made a little bit of money. Because sometimes on some brokers, if you put your stop loss exactly at break even and it comes back and hits you out, sometimes it can take you out um, in a negative margin. So always be aware of that to put your stop loss, at least, 2 to 5 pips or something in profit. So TP1 at 35 pips. But then look what happens right here. The market continues to trade higher for a maximum of another 95 pips, right? So now you went from 15 pips here all the way up to 90, turning this into a 6-to-1 trade. Beautiful, beautiful, right? And that would have probably settled it for me for the rest of the week. So let's move on to the next week right here. I'm going to clone that market open. Let's see where this market open is right here. See, we have December 4th, December 6th. So market open was right here, right? So Monday and Tuesday, as you know, we just let it do its thing. We don't really, we don't really, I don't really like to, I don't really like to trade on a Monday or a Tuesday unless it really gives me like really, really beautiful setups, right? So even I guess you could look at this area here on this Tuesday, and even though it's not the cleanest, um, you still would have made money, right? So you see how right here at the start of London, basically, or at midnight, price had traded down, okay? Price had traded down and then aggressively got out of this area down here and traded back to the upside. So price didn't stay around very long in this area, and we broke this structure here. So what would I be looking for? From this swing low to the area that where structure got broken, right up here, right? There we go. And then I look for a point of interest, right? Anything around, where that structure got broken. Maybe it was that last down candle that caused price to push up and break structure. Maybe we left an inefficiency around in that area, a rally-based rally, drop-based drop, a a breaker type of situation. Anything, any type of point of interest that I may have in my arsenal, I never look at them unless I get a break of structure, right? So remember that, write that down, because a break of structure is always going to be your guide, right? It's always going to be your guide and direction, even if your bias was overall wrong, like this trade example here, from this inefficiency down into this inefficiency here, even if your bias what turned out to be wrong, right? You're still sticking to your trade setup. So let's say we entered from 50% of this inefficiency. We only had a drawdown of 2 pips, could have had stop loss at 11, right? And your take profit area would have essentially been up here at 28, and it just fell short of that area and traded lower. So, you know, you would have been in profit for some amount of time, and then ultimately this thing would have, fell through the floor on you. And there's nothing wrong with that, right? We can't get, you know, we can't get our bias correct every time. But if you stick to your trading plan and your method, and if you have proven to yourself that it consistently works for you, you know, then you're ultimately going to see an increase in even your trading skills at least, right? So continuing on now, this is what we get too. This is exactly what we deserve for trading on a Tuesday. So let's continue on, right? So look, Asian session, we come up, we create a high of the day right at midnight, and then we start trading down. One thing that catches my eye really quick is this this break of structure right in here. So here is that last area right here, this last push to the upside, right? This last push to the upside before structure had gotten broken. So from this high point to this low down here where structure had gotten broken, I want to be using my fibs as a guide, right? So I can see, right, maybe price could get back up into this structure or this last up candle before that structure had gotten broken. So look, I'm just going to mark off that 82.72 fib level. And also, if you take another, if you take another look into this, if you take another look at this, we had just now traded back under that market open. And look at what reaction we got off of that market open. A crazy, crazy reaction off that market open, right? So initially, first take profit right here at 20, or excuse me, at 22 pips. If you were twin trading, this had dropped a easy 50, 60 pips in 3.5 hours for you to collect that money and possibly even be done for the week, right? 50, 50 pips, even just in a week, is phenomenal. You can make a very good living with just 50 pips in a week, right? So here's Wednesday going into Thursday. Now, I want you guys to maybe, take a second. I'll mark off. Here is, let's see, here is 7 o'clock New York session right here. So I want you guys to maybe pause the video if you need to and try and map out or spot a potential entry that I might see. Okay. Okay. So we're back. Now, one thing that I notice, that I always say is I never want to get in the market unless I see a break of structure, right? So hopefully you guys had spotted the break of structure in this area, okay? So what I see in this area right here, we get this aggressive push to the upside, breaking these equal highs here, right? So, and leaving inefficiency down in this area, right? And some of you guys may ask or comment on this video, why do I like to use the fibs if I can just spot these entries, um, with my eyes? And, that's actually a good question, because I can spot these entries with just, looking at the charts. Some of you guys have seen me do it many of times, and it's really nothing new. But what I like to do is keep my trading as simple and basic as possible. And everybody has their own, methods, techniques, things that work for them, things that they like to incorporate with their trading. And mine, I just like to use the fib as a parameter of where I, can see a potential, um, you know, fib level around my point of interest. So yes, you are correct in the sense that I don't need the fib level. I just like to use them as, a potential like trajectory to where I might be able to look to enter. It's just another confluence. And I don't enter on the 62 just because it's the 62 or the or the 61.8 with all the retail crowd, or the 72 or the 82 just because price gets there, right? uh, you know i need a I need a real point of interest. I need a stable point of interest to where I think price might be able to potentially reject from, right? Price isn't going to reject from the 62, 72, or 82 just because I placed a fib here. Price is going to reject from, you know, what has happened in the past in price, you could say. So, continuing on here in this area, we can see right right here, price had broke structure to the left over here. Boom, broke that structure. We take a fib from that swing high to where that swing low to where that swing high was created. Now look at what happens. Coming right down at 8 o'clock, 10 minutes after 8, so pretty much 8 o'clock exact, we get that 50% inefficiency fill and just fly to the moon, right? So let's say we entered at 50% because you see how the 62 is a little bit higher than where this inefficiency was, right? So that 62 is irrelevant to me in this setup. I would be looking around the 72 area in this inefficiency, in this area of inefficiency here. So let's say we entered 50% of this. We had a literal 1 pip drawdown. You could have had I can't see the number, 14 pip stop loss for a potential of 43 pips and profit. So let's see what the risk to reward ratio is on that. Potential max of 60, but let's say our take profit here. So 3 to 1, 3 to 1. And let's say this, we got out at the exact high here as a 4 to 1, right? Crazy, crazy setup. Now look here. Look here. From this swing low where that inefficiency was, you can see another break of structure right here, right? So from this swing low to this swing high up here, we got another break of structure. Now, look at structure here. It's very, 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 these are the type of structure right here where you have to back test and train your eyes to see this type of stuff. But look at where this sort of, you know, pattern occurs right here where price had just, let it all go basically. Look at where this pattern is right here around structure right in this area. You could say from that wick to the body, boom, just like that. Look at this reaction right here off of this. So from here to -10 would have been 53 pips. Just barely came up short of it, right? But that's a crazy move. That's one hell of a move. But look at what's even crazier is this gave you another re-entry. Um, this gave you another re-entry after your initial rejection from this area. So we see this big hefty push to the upside, price retraces back down in that area. And then look at this. So from this low right here where our initial rejection was up to this high, boom, right there. You see this right here. Could have had a beautiful entry right in here, right? So your stop loss on this trade in particular would have been about 4 pips. And let's just say we were targeting this high up here. So 40 pips. So let's just see what the risk to reward ratio is on that. So about a 4 pip stop loss to a potential 44 pips, 45 pips, 11 to 1. I'm done for the week, right? I'm done for the week. Today would have been Thursday going into Friday. Profits had been hit from all 3 entries right here. Yeah, 3 entries, guys, on the same day. 3 entries, all in profit on the same day. I'm definitely done for the week. Okay? So going into the next week here, Friday, market closes. We open right, oops, we open right here. So let me clone that, drag that over here to the market open. So look, we have the 11th, 13th. Market opened right here. Okay? So now look, price is traded above on this Sunday. Okay? So look at, here's Monday. We don't really trade on Mondays, so we're not going to look for anything. Going into Tuesday, right, there's not really too much of breaks of structure in terms of what I want to see. But if you look right here, right, right here, going into New York session, okay, so we had all of Asian session. We came up, we created a new high of that session so far, capturing this liquidity to the upside. And look what happens here. So we trade up and then we trade down immediately, right? So we capture this liquidity and then we break this structure, okay? So look at what happens in this area. I'm sure, some of you guys that have already been paying attention to smart money can definitely find where our point of interest should be in this area. But if you're new, once again, maybe take a second to pause this video and try and map out yourself where you think the potential entry could be for this type of setup. Okay. All right. So we're back. Okay. So like I said, if you've been paying attention to smart money, you might already know where this potential entry is going to be. But now look, we have this high right here that broke structure to the downside, correct? So I want to guide myself this high to this low here, right? Now, looking at this, where does our point of interest lie on these fib levels, right? Around the 82. So we see this last up candle, let me delete the fib for a second. This last up candle that got engulfed and then broke structure, right? Always look for the break of structure. Okay, so let me place that fib back on. And now you can see clearly in between this 72 and 82 fib area, we get that just precision entry, right? So we would be looking to sell here. Now we would have our stop loss just above this high right here, 5 pips. First take profit, remember, always right here. So this just turned into a 2-to-1. And then now let's say we're targeting these lows down here, a 5-to-1 for 30 pips. 30 pip intraday setup, 5-to-1. Oh, wow, actually turned into a 6-to-1. Sorry. Look, 6-to-1 trade setup, 5 pips stop loss, 30 pips max on your TP. First take profit was at 14, 15 pips, and it went for an extra 30 just right at this low. Went for a maximum of 40 pips basically. So almost, excuse me, almost even an 8-to-1 trade setup on a Tuesday. But we're gonna leave it realistic and go 36-to-1 trade setup. Just just a beautiful, beautiful trade setup. This is what I would want to ideally look for, you know, almost every trade setup. If every trade setup could be this beautiful, oh my gosh, be like heaven on the charts, right? But you know, I think that's going to end it. Actually, for this video, we can scale out, and you guys can see, just looking back on this, we actually had one more week that we could have back tested, um, but it's fine. So you guys can see, looking back on this, right? We back tested the whole month of December, and we had, multiple setups every week, you know, looking for basically the same stuff, right? We had one, two, let's see, this is Monday. We had one, two, three setups that week. We had one, two, three, 4 setups that week, and we had a beautiful setup the week after, right? And we're out of the market. So, this stuff, it takes time, it takes practice, to be able to see these things. But just in case if you guys still don't believe me, we can look at this setup that I had recently marked out. Here is before, right? Here is the before setup. So what I was looking for, right? Price had got up to this high here, and structure was right in this area here. So look at what happened. We see this big impulse down, right? Breaking that structure. So what I would want to look for, what I was looking for, was price to correct itself back up into this area and giving us that nice rejection. Okay. So here is the before setup, and here it is after, right? So you can see this stuff, it's no joke. This stuff really works. Okay. So looking at this setup now, we would have entered up in this area around structure. This went almost 200 pips, right? If I'm, I just showed you guys intraday setups on the 5 minute time frame on Euro USD, but it also goes for higher time frames as well. You know, the markets are fractal in a nature of, what you see on a larger scale happens on a smaller scale, and what you see on a smaller scale happens on a larger scale as well. So so the style of trading doesn't change even if your time frames do. So same setup, just bigger moves, right? And that's what I like. That's why I'm always sticking to, the 4 hour daily, weekly time frames, because I like the bigger moves. I like moves like this where I can catch, close to 200 pips or first take profit here even at 90 pips, and just be done for the week, right? 1 to 2 setups, 1 to 2 ideal clean setups for the week, maybe even one, and I'm out, right? I'm out for the week. So that is going to do it for this Christmas special that I have for you guys. Hope you guys enjoyed. Hope it was insightful for you guys. We went over major and minor swing points, finding intraday setups, and using breaks of structure to your advantage. And I wish you guys all a Merry Christmas and a Happy New Year, and even better, just an amazing 2021 that's coming ahead of us. But good luck to you all. Good luck in your trading. And until next time, I'll see you guys then. Peace out.